Hello guys, welcome again to crypto trading. Real quick, today we are going to be talking about uh, analytics, technical analytics, and in this training, we'll be talking about the technical tools that will help us in making decisions. Like you all know, in crypto trading, we want to buy when the market is low when the market price is low, and we want to sell when the market price is high, just like in our normal um, market transaction where we have different commodities. So we want to buy when the market price of that commodity is low, and we want to sell when it is high so that we can make profit. The same thing is applicable into and in crypto market. So please, you are going to go with me as we talk about these tools. But real quick for tonight, not to waste our time, we'll be talking about Bollinger Band, Bollinger Analytics. So let me quickly show you what we are going to be doing. Let me set up my screen, right? Um, okay, is it? And um, this is what we'll be using in making major decision because we need to know when exactly is the market price of this coin, when is it low and when is it high, when is it profitable for me to enter into the market and when is it profitable to leave the market. So this is the Bollinger chart. If you look at this technical indicator, if you're looking at my screen right now, this is the technical indicator. So when you click on it, it gives you varieties of indicators. Here we have MA, moving average. We have exponential moving average. We have weight moving average. And the fourth one on the list is the Bollinger moving average. So for tonight, we're going to be talking about the Bollinger moving average. So I'm going to save it, and this is what we have now. So in this indicator, what we have the lower band and we have the upper band. Those are the two bands that we have. The third one is the center um, band, which is also a critical line for us in our analysis. So, what is this analysis is all about? We are going to be making decision based on these three lines: the lower line, the upper line, and the center line. So for most of the crypto traders, the entry point, which is the lower line, indicates when the market is overbought. When the market is overbought, no, when we have more buyers of a commodity, there is tendency for that the market price to go high, to appreciate. So is a is a good entry point for for crypto traders. So when you see that the candlestick is touching the lower line, it means you have a good chance of making profits when you buy at that particular point. It's a good entry point for you. Then the upper line is when the market is ripe for sale. So it simply means the market is oversold at this point. So when the market appreciates to this extent, it is wise for you to sell off that asset, or you can enter a sell order here. So when you enter a sell order, when the market falls, you make profit. I believe you all are aware of that. Then So the center line is simply a resistance point where your market sometimes will need to cross to move to the next cycle. What do I mean by that? Sometimes there might be high resistance where the markets will trade within this region before it move cross to the next market cycle, or probably trade in the upper region before it crosses to the lower uh, market cycle. So what basic thing I take from this chart is, if you look at this CHR um, from actually I'm using 1 day chart. So if you look at here, look at this uh, line here, you can see that the red candle crosses below the center line, which is an indicator for you that the market is being overbought here. So it's a good entry point for you. So after a market is being overbought, there is a tendency that the market will appreciate, and which is what you can see here. You can see the market appreciates, more buyers comes into the market, and they bought, and the market price continue to increase until it gets here where the market was now oversold, where sellers were now selling their assets. And what do you expect? The market starts falling again, and you can see it crosses the center line straight up and return back to the lower line. What is interesting here is that here it did not touch the uh, lower band before it crosses again back to the upper band. So here you can in this region you can just decide to enter the market here. That's the essence of using this chart. You can decide to enter the market here and look out for the next market movement. So when the market touches here again, the upper boundary, you can see people started selling again and it falls. So look out for when you are going to enter the market, when it touches either the upper or the lower. So it is important to use these tools so that it will help you in managing your assets. So this will be all for tonight. Next time we'll talk about the convergence and the um, squeezing market analysis of this Bollinger um, analysis. So thank you guys. Please watch the video and um, take a time and practice on your like, share, and comment whatever contribution you have to the video, or whatever suggestion or lesson you need to add, so that others can also learn from you. Thank you so much. Take care.